This is an audio recording of the LendIt Fintech Weekly News Show. The show is streamed live on LendIt TV, LinkedIn, YouTube, and Twitter at 5 p.m. Eastern Time every Thursday. In this fast-paced show, the LendIt News team and a special guest discuss the most important fintech news stories of the past week. Good afternoon, everybody, and welcome to the LendIt Fintech Weekly News Show. My name is Peter Renton, Chairman and Co-founder of LendIt Fintech. I'm joined today by my good friend and colleague, as always, Todd Anderson. How are you doing, Todd?
I'm good, Peter. How are you?
Doing great. And our special guest today is none other than Kat Utek from Core Innovation. How are you doing, Kat?
Doing well. Happy to be back. Thank you, Peter and Todd.
Okay,
happy to have you back.
It's been a while. So we are all three of us just came back from Money 2020, where there was some, it was a good event. I think it was great to be back in person at a fintech event. I had a blast, and I think I know you guys did as well. But let's kick it off with the news, and this one has nothing to do with what happened at Money 2020, but Nubank is the largest digital bank on the planet when it comes to by number of customers, and they're inching their way closer to an IPO. What we found out is that they have filed confidentially for an IPO, so we don't actually know any details yet. But we do know that they filed in both the US and in Brazil, talking about a potential public listing by the year end. The last valuation was around 30, but that was a while ago. And in fintech time, that who knows what the valuation is going to be now. But anyway, Nubank as a public company, what do you guys think?
Awesome. I don't know. Fintech keeps going up and to the right in the US, everywhere, kind of around the world. I know I'm excited. I'm excited to watch a lot about what's going on in LATAM. And there's a lot of, I spoke to a lot of people at the conference, and they're focused there. And then, you might have even seen QED just is hiring someone in Africa. So yep. I think it's great to see fintech expand globally, because it is global. And I think just like crypto in general is global, to have banks come out and they can be global, that's great. But I think Nubank has so much potential. And again, not just in Brazil and in South America, but eventually around the world. So I'm excited to go through their S1.
Yeah.
That's what I'm most interested about is where else they could potentially go. They've, clearly made their mark in LATAM. They haven't done as good in Mexico as maybe they probably had hoped, but they're only there only maybe a year or two. So yep. I'm sure they'll get to the point that they want to. But where else they would go is more interesting to me, whether it be other emerging markets, potentially the US. And we haven't really seen one of those outside the US digital banks really take off in the US. It's been mostly European-based digital banks that have had I guess a little bit success, but we haven't seen them come here and then just take off. Revolut's kind of middled around. N26 has had a little success, but we haven't seen one from outside the US have that type of success. And maybe Nubank's the one that eventually will do it, though I suspect they'll probably go emerging market elsewhere in the world before venturing into the US.
Yeah. Yeah, I think the US is probably a long way away, but by my perspective, I think they still got other places in Latin America they can go.
Yeah, for sure.
There is Colombia, which is where David Velez, the CEO and co-founder, is from. I know they've started there. I don't think there's really much traction yet, but they've got there's lots of other places, and I think I just continue to be more and more impressed with Nubank as time goes by. They continue to execute the fact that they spend virtually nothing on customer acquisition in Brazil is astounding to me. They some of their metrics are really incredible. Like you said, Kat, I can't wait to dig into their S1 to get some of the data which has remained elusive for all of us for many years. But
do you think it could, before the whole mess with China happened, I think it was valued or rumored to be valued at like 150 billion. Do you think Nubank could get that high?
I do. I think I can get that high. I think they have. I mean, I don't know.
I don't think it's obscene to think so. I agree.
No. But I mean, I think they'll probably go. I mean, I think they'll probably go out at a valuation. I mean, maybe, Kat, you probably got a better guess than me, but they went out. I think they'll go out at a plus $50 billion valuation to start off with, and
yeah, I wouldn't be surprised. I mean, I think like the largest Brazilian bank, is worth over $100 billion, and I don't see why they can't be bigger than the largest bank. So I think I just looked; it was like maybe like $350 billion. So why not be that big?
Yeah, yep, agreed. So speaking of big digital banks doing an IPO in the near future, Chime. This came out in Forbes. I think it was late Friday or early Saturday. Talking about going public. They're targeting March of 2022. Apparently, they're talking a valuation of 35 to 45 billion. And just to put this in perspective, I went and looked at a chart that had the valuations of the top 50 banks globally. Mm-hmm. And $45 billion valuation, which is what Nubank might have, Chime might have, that puts them well inside the top 50 globally as far as valuation of banks. So we're talking about some serious enterprise. The thing that I was actually surprised, they may hit $1 billion in revenue this year. I didn't think they were that close to it, but 900 million to $1 billion is what they're saying in this piece. So we're going to have Nubank and Chime certainly within probably 6 months, both be public companies. And, Chime is by far the largest digital bank in the US, and Nubank is by far the largest digital bank outside the US. So it's going to be interesting times.
Yeah, I think just knowing a bunch of the team there, I think they've established themselves as an awesome challenger bank, and they also have so many new innovations that are coming. So I'm excited about how big that they really can be. I think they've just cracked the surface, right? They started with debit, added some credit. There's so many other things that they can add, and they really know how to serve a customer base that has long been ignored by most U.S. banks and really treat them well. So a lot more of like low and moderate income type of customers. So I'm really excited about one, the mission of what they're doing, and then two, all the places that they can expand, and they have the right people to do it.
Yeah.
I mean, I think that's the most interesting piece about the customer base of Chime and Nubank, what they look like versus the customer base of whether it's the biggest bank in Brazil or Chase or Bank of America, and just that inclusion aspect of how many more people are in the system at the lower ends of the economic ladder that are now using their tools and either getting themselves on a more stable financial footing or just finally having access to stuff that they never had access to before. And that dynamic and the valuation and all those things playing out versus how a traditional bank's been valued and who their customers are. It's a pretty interesting contrast to where the two challengers are and where the traditional banks are.
And what'll be interesting to see is if that customer base that's long been ignored, right? And people constantly talk about embedded fintech, embedded insurance. What other products will Chime be able to sell besides debit, besides credit? Will they get into some insurance? Like what will they cross sell? And we've watched SoFi be able to cross sell so many other things. So I don't know. I'm excited to see if it becomes kind of like that Amazon of financial services for the moderate income market.
I mean, they probably should do brokerage and have stock trading on there. If that's certainly something that they could offer. And I think, I was chatting with Frank Rotman earlier today, and we were talking about digital banks and like talking about the displacement. So, how long is it going to be? What is the top 10 most valuable digital banks, most top 10 valuable banks, going to look like in 10 years' time? Will it be half fintech? Will it be 3/4 fintech? It's certainly going to be some, because we're not far off right now. And you look at I think about Tesla sometimes, where I think I read this morning that it was valued that the next 9 largest automakers are still not. They're still add up the total valuation. They're less than Tesla today. I don't know if we're going there in financial services, but it clearly is. I mean, we don't really have an Elon Musk in financial services for when it comes to fintech. Anyway,
Elon Musk was in financial services. He was like the original.
I know. He was. Yep.
I don't know. And maybe Chris Britt will be our Elon Musk.
Yeah.
We'll see.
Yeah. He needs to get out there more. I don't see him enough on TV and the radio and that one, the podcasts rather. On
Let's hope he doesn't start antagonizing people on Twitter like
Right. Okay, let's move along. We're now going to talk about another two very large fintech companies doing a partnership, Stripe and Klarna. This came out earlier this week, which I think is really interesting, where, Stripe, obviously the most valuable fintech company there is, probably in the planet, now that Ant Financial is not as valuable as they used to be. But Stripe offering, now they're going to be able to have Klarna buy now, pay later options for any Stripe merchant, and there are huge numbers of those. And I think this is it's a pretty logical step for Stripe, but a huge win for Klarna, because they even said it's the biggest partnership to date. I mean, there's been a lot of activity in the buy now, pay later space, and these companies are looking to grow. But I feel like, it's for Klarna. This is a huge deal.
It's funny coming away from where we all just were at Money 2020. I noticed more credit card stuff at Money 2020. Yet in the last 6 months, it's all been about buy now, pay later, buy now, pay later, buy now, pay later. And you go to an event, and it's all next gen credit card. Depending on, it was like probably 5, 6, 7 companies that I didn't know as well in terms of, maybe heard a couple of them. But it's interesting, the dynamic playing out in that credit card type space, which I think buy now, pay later is somewhat affiliated with. The dynamic between the buy now, pay later offerings and now the new credit card offerings.
Yeah. And whenever we evaluate it, I do think it's in a similar space. I understand why some of the valuations or all the valuations of buy now, pay laters are higher than just pure credit. However, I mean, that's what a customer has an option to, right? Like, and when you're checking out that button, you have many choices. And so, what's the psychology about what you choose and how? I think it's huge for them to have the partnership with Stripe. And I wonder what other people we might see go and partner with other buy now, pay later providers to offer that as a service. And I think one of the interesting questions is like, how are consumers really going to choose? And can they really figure out like what is the best product? Are they better off being in something where they might have equal installments? Or are they better off being more in like a monthly payment type product? I don't know. It's an interesting question, but I do like a lot of these buy now, pay later with like the $0 down, you don't owe interest for several months. So the more credit that more credit choices that come out, I think is just better for consumers and businesses.
Yeah, we're going to get to a point like when you go to check out, are you going to have like 5 options? That's going to be there is a limit. There is a limit to what the consumer can bear when you have too much choice.
Yeah, well, it's in stealth, but we have a company that's actually like, you know what, it will actually automatically decide what you should do based on what will end up being the cheapest in the end for you, or maybe that gives you the biggest rewards to choose. So I think, and if you read Matt Harris's article about decentralized finance, I think the future is there are all these options, and then some, like your one card will automatically choose, okay, for you and your financial situation now, this is the best thing to do.
Yep, that I feel like where the whole financial health aspect of all of that is really interesting as well. Where, I mean, when we're there should be really an aggregation, because a lot of people now have buy now, pay later with Klarna, with Firm, with Afterpay, with Sezzle, and they're all kind of separate. There needs to be an aggregation layer, and there needs to be like, or at least start to have some uniformity on how it's reported.
Well, I think that's
not everyone's like reporting to the credit bureau. They're definitely going to report your bad payments, but doesn't necessarily report everything.
Agreed. There should be, I think, standard rules everyone reports to help build people's credit. I think we'll see all that standardization start to come. I think, though, if you had like an automatic solution behind you, they can choose, because all these, if you're in a firm, they might want someone with a higher FICO score than if you're with some other companies that I know, and so your card will be like, oh, okay, you can use this or you can't use this, and they'll know your best options for you. I think that's probably easier than having a consumer go through like 20 options.
Right. Okay, let's move on. I want to talk about Visa and this is an article in the Wall Street Journal earlier this week. The Justice Department is probing Visa's relationship with two different fintech companies, two very large companies. First one is PayPal, talking about Visa offering. I mean, when I read the article, I thought, well, what's there to really go on here? They're basically offering financial incentives for PayPal to use the Visa rails. I thought that's what would be expected Visa would do. The same thing with Cash App, with Cash App, Square, obviously offering the similar sort of things where they're providing, they're really making sure that these companies are using the Visa rails. Apparently, this is antitrust. I don't know. I'm not a lawyer, but I feel like there's not. I didn't feel like there was anything here when I read the article.
Yeah, they were also looking at the connection with Stripe too. I think the bigger thing is from what, at least the way I read it and the way the article seemed to be, it was the disincentives to go elsewhere. You're basically, I guess what they're saying is that they're, in a way, bad mouthing other networks through these things, and that way that the whoever the company is, would not go to the other merchant. I mean, but I agree. Some of this doesn't seem to be very obvious right now.
Yeah, I think some of it, though, I wonder how much when they were doing the investigation to Visa and Plaid that they ran into other sorts of information. And then even though maybe they shouldn't use it, they're inspired to go after them for certain behaviors. My guess is there's probably a lot more behind this article than what we probably can see.
Yeah.
Because I agree. From here, it's like, okay, like, so they're competitive. Like, people have marketing incentives all the time for this stuff. What's the big deal? But that would be...
This is like just the first volley. Like here, we're just putting it out there. There's something going on, and then a few months later, we'll start to find some details behind, and then I'm sure they'll probably settle and pay some sort of fine and move on.
Right. Well, there's I look at what Plaid was doing. The whole Plaid, because Plaid now have a payment mechanism that they ran out, I think, last week. That's bypassing the Visa rails. So I think that was, that to me is maybe, who knows? But I feel like Visa wanted Plaid for that. Is how I looked at it the whole time when I first saw. That's what Visa wanted. So when people connect to bank accounts, they can still use Visa can still make money to get in. Anyway. We talk about Visa. We're going to talk about Mastercard, but in a completely different. This is news that came out of Money 2020. Mastercard are doing a partnership with Bakkt. That's BAKKT, the crypto company. This is a partnership where basically, from the way I gather, and I never did get to talk to the Bakkt people or the Mastercard people about this detail, but. From what I gather, they're saying every Mastercard cardholder globally, and there's apparently 1 billion of us, every Mastercard cardholder will soon have an option to use their Mastercard to pay via crypto. Now, I don't know. That's going to probably take some time to get that ecosystem ready, but that is the plan, and and I think it's great. I think that's it's sort of been. It's funny because we've been talking about this for years, and it's really the credit card companies that are really making this possible, which I don't think anyone's expected would happen.
No, it'll be interesting if you can get rewards in Bitcoin. I think I just heard about someone else kind of doing that and turning that into rewards. I think it just makes crypto become more mainstream, and so I think it's awesome.
Yeah, and it's I think the only way it becomes not only mainstream, but the regulators eventually figure out what to do is with the likes of Visa, Mastercard. I think it was what was it a couple weeks ago? PIMCO. Like the stronger the financial institution that begin to get into the space, the more that they'll want clear guidance and understanding on the rules. I think fintechs are at a disadvantage in that way, in that they don't have the power or the lobbying power to do so. But and granted, the rules maybe get skewed towards the traditional players a bit more, but at least that there's clarity.
Yeah, for sure. And I think I'm reminded. I don't know if you remember that keynote that Tim Draper gave at LendIt. I think it was 2018 from memory, where he went like 20 minutes over time. He went on a rant, like he is wont to do. And he was one thing I remember though. He said, in 5 years' time, you'll be able to pay with crypto anywhere. And at the time, I was thinking, it's possible, I guess. And then nothing happened for 2 years. 2 or 3 years, really. Nothing really happened, although it's not going to happen. But now I think he may end up being right.
The only thing is, though, I wonder, right? There are so many people that really believe in just holding. So do you really want to? But I mean, remember the joke about the people that bought the pizzas that would now be worth, I don't even, at these prices now, they'd be worth $1 billion in Bitcoin. So I wonder how much people will really spend. And is it really going to be used like to transact? Versus more, and I think it goes into our next topic about like stable coins, and do you want to just kind of hold something versus like actually keep spending it and using it? And I think you also have a serious problem just with what they're doing with the taxes. If I'm paying for things in Bitcoin and I keep going like in and out to fiat, am I going to get taxed on each of those transactions up or down? And like to kind of, so that's and I think it goes back to what Todd just said about like you need regulatory clarity, and it's not just going to be from like the SEC. You also have to have the IRS, because if they're like literally going to charge you for each transaction, how you act, is going to change, or you're going to have some other tech solutions that's going to have to. And there are some applications that are trying to track you about like when you're going in and out of things, and how can you balance it so you make sure that you're reporting correctly. And so I think until we get that in place, I think it's really going to be hard, though, where it's like truly mainstream and people are transacting in these currencies.
Right.
You need all the regulatory and different government agencies to kind of all begin to come together on all the different cascading effects that one transaction could have. For whoever's doing it, whether it's tax issues, SEC issues. I mean, and it doesn't seem like they're very close to
we are
consensus on that in any way.
We are a ways away on full consensus, but there is movement. And this is our next story. And this is the SEC. There is a new report that's coming out. They say this week, which, this week is almost over, but they say the report is coming out that is going to really detail how the government is going to regulate stable coins, which is now worth apparently $131 billion, according to Business Insider. And so, but they're talking about the SEC taking the lead. They're also talking about the CFTC. And, I think the stable coins is something that I think that's how we're going to kind of get, like the SEC is going to enter into crypto regulation through stable coins, is how it feels like to me. So.
I don't know. I mean, obviously, like I'm sensitive, and it's very public that the SEC suing Ripple. I think you might end up getting some regulatory clarity off of that as well. But they're, and just talking to people, in Vegas this week, and when I was at Crypto Week in Miami, I think that's what's really holding back, crypto or DeFi really exploding here. And if the government doesn't move soon, I mean, people will set up shop other places, and I've watched them set up shop other places. Yep. So hopefully between the SEC Ripple thing and the stable coin regulations, that will end up moving forward. But I fear it's still going to be like years. And I know a lot of people in the community have tried to draft legislation or suggestions on have tried to draft regulation and suggestions on what to do. And I think the government's just not there yet, right? Like you need to educate them on what this is, how it is, for them to really understand it. And there's still very few people that do. And then once they understand it, then they can maybe choose about how to regulate it. And again, I think we're years away.
Yeah, you're probably right, unfortunately. And I think, as you said, there's already, it's happening right now. The crypto companies there's several that have decided to set up shop elsewhere and not even really focus on the US market. Because of the uncertainty. They don't want to risk it. So, which is a shame, I think, for US consumers. And I think it's,
and the overall US market. I mean, you have China that clamped down on theirs. Now you have the U.S. that just continues to kind of muddle along without clarity. and soon enough, we're going to be left behind if we don't figure out something, because these companies, there's a lot of innovation and a lot of really great thinking going on in the space, and we should be trying to tap into that versus become adverse to it.
Yep. The smartest people always go where the opportunity is, and hopefully the regulators here don't stifle that opportunity.
Yeah, one thing I heard, I was watching Brian Brooks speak this week at Money 2020, and he, obviously the former OCC head, and he was saying it seems to be that like the regulators in Washington are very much like they're not concerned necessarily about the end consumer. They're much more concerned about the incumbents. And so they're regulating to protect the incumbents rather than regulating to protect the consumer. And that's what a lot of the podcasts I listen to, they say, who are the SEC trying to protect? You can put your life savings in Dogecoin right now and have no, but that's been able to that you've been able to do that for years now. And it's still like people are doing that. Most people doing that, I recognize that there is risk involved. And if you don't, you can still put all your money in a penny stock and lose it.
You can go to, we were just in Vegas.
Yeah.
You could go put 10 grand on roulette, lose it immediately. And that's totally fine.
Yeah, I think it might be protecting the incumbents, but I think they're actually also just trying to protect the government, right? Like we have a lot of monetary policy here. And when you start having other currencies that become a major player with your own currency, I think it becomes harder to regulate. So I think they're just trying to figure out how can these things coexist and how will this affect US monetary policy? That would be my guess of not just even protecting customers or the incumbents, but it's them protecting themselves.
Good point. Good point, Kat. So, we need to move on. I want to end today with a couple of earnings reports. We had two. We're going to end with two very different reports. First up is Robinhood. They reported this week, and this is you remember in Q2 how crypto just went crazy. Doge went up to 70 something cents, and ETH and Bitcoin hit all-time highs, and so they had huge amounts of crypto trading revenue, $233 million in crypto trading revenue in Q2. Q3, pretty quiet on the crypto front. We've had a bit of a run up in the last few weeks, but this is Q4, obviously. 51 million, down from 233. That's a pretty dramatic. It's a tough business to be in if you're making money off crypto trading because it is volatile. But the thing that struck me, a net loss of $1.32 billion, which was much bigger than expected. And Robinhood, it's going to take some time. I think it's probably a really tough company to do analyst projections because you don't. I think once they have a few quarters under their belt, they'll probably get better at it. But a volatile company to say the least.
Not much more to add on that one, Peter. You hit it. Okay. You hit it right on the head.
You said it all.
Okay. Well, then we'll end with LendingClub. LendingClub had an excellent earnings report. The originations up 14% to 3.1 billion. Revenues $246 million, which is just a hair below $1 billion run rate, annual run rate. So the stock is up 33% today. It closed
comeback story.
Yep, it's a comeback story. I sold my LendingClub shares when they hit 25, thinking this is, I've been holding on since the IPO, and I thought that was a mistake. They're at 40 something. But
what's funny about LendingClub is not only obviously the stock has come back, the company's rebounded, they bought Radius Bank, but the other thing I noticed about them is that they've been less public than they used to be. They used to make a lot more announcements. They used to be a lot more in the press. And now it seems like they've reversed that, did the acquisition, and now have kind of their heads down for a while. And it's clearly paid off in how the company's performing from where it was, year and a half, 2 years ago, where it was down. I think it got all the way down to below $5 at one point.
Yeah, it was. Yeah.
Yeah, I think it's impressive what they built, and I think it's a good example of that you can come back. I am worried about how much consumer credit people are taking out, and they have more, as we just started with, they have more options than ever. And then they're also investing savings into, via Robinhood into like Dogecoin. So it'll be interesting to see. I kind of can't blame the regulators for being a little nervous about what happens in this ecosystem, because you do have a lot of people, I think, that are probably hyperextended. And then you have them investing in things that might not be good enough for retirement. So it'll be interesting to see how next year or two goes, and what happens if we hit any kind of type of, how real this hyperinflation is, which it seems like it might be coming. And it seems like it might be less transitory than than they initially thought. So it'll be interesting to see how that affects everything in fintech.
Right. Well, one interesting thing from their earnings presentation that LendingClub said, they're now looking at a total addressable market of $1 trillion in loans that can be refinanced. Now that includes auto as well as consumer credit, and they clearly have some room to run. The thing I've been disappointed with LendingClub on the investor side, like all the investors, that's how I really started in this space, was as an investor with LendingClub, and they've done nothing for the investors since they closed. They announced the closing down the retail platform. It closed down 10 months ago, and they haven't really announced anything new. And I know they've been focused on the integration with the bank, and that seems to be going pretty well. They're back. They're back. They're at what would be, I would say, a multi-year high right now. But I'd like to see more actual product innovation. I think we haven't seen much out of LendingClub with that, and I think that's. I hope that will be forthcoming. Anyway, that's our time. We are out of time. Kat, thank you very much. It's always great to have you on. Todd, thanks as always.
Have you back, Kat.
Yep.
Nice. Good to see you guys. Have a good weekend.
Yep, you too. We'll be back here same time next week. And before we go, just a quick plug for our LATAM event happening December 7th and 8th, where it's still the hottest region in fintech in the world, and we'll be all gathering in Miami or online on December 7th and 8th. So check it out, LendIt.com. With that, I will bid you farewell, and we'll be back next week. Thanks, everybody.